You're listening to the RE Social Podcast with your hosts, Andrew and Vince from OnV Invest. For more information, go to onvinvest.com.
What's up, guys? Welcome to another episode of RE Social Podcast. Today, we have a very young, good-looking guy, Jack Duffley. Yeah, how are you, Jack?
Thank you. That has got to be the best intro I've ever received. So you take the cake there. I appreciate it. I will say I am pretty young. I just turned 26 on April 1st. So, and that is not a joke, but thanks for having me on.
Of course, man. You know, not a lot of days goes by where we actually have a lawyer who's also an investor. How did that come about?
I guess you could say I was looking at investing before I became an attorney, and while I was in law school, actually, I got started with house hacking. So it was kind of my foray into investing, the first big swing, you could say. So yeah, I always kind of saw, well, not always, but I eventually came to see law as more of a sort of supplement or a certain way that could help me in investing long term via connecting with people in the space, also just the legal perspective on things, looking at risk in a different way. So pretty much any career you go into probably can complement some aspect of investing. For me, it happened to be the legal route. Partly because I got some really good offers when it came to law school. I ended up going to law school on a full ride, and that was a big factor towards doing that. Had I not gone a full ride, I don't know if I would have done it. Maybe it would have ended up somewhere else. But yes, that's kind of how I got to that. Meanwhile, investing the whole time, because you never know what the future is going to hold. So you better try and invest for it to give yourself some defense in the long term.
Yeah, I didn't even know law school had they paid for schooling. I've never heard of that. Is that common?
Yeah, well, I don't know about common, but it's not like exceptionally rare. It's a repeatable process. I've talked about it on my YouTube channel before, where you can sort of manipulate your way. Maybe that's not the best word. You can definitely get a full ride to law school depending on how you play your cards. If you go to a school that's quote unquote below your numbers, if you kind of look at the median numbers of each school, and even if you don't get a full ride, you can often get a pretty substantial aid package, just based kind of on your initial application numbers. And if you get some good offers from some schools, you can use that as leverage against others. So I was actually able to get a few full ride offers for some mid-tier schools, and I ended up going to one of those. And I have heard about schools actually paying people to go, but I think that is exceptionally rare, where they're actually paying you beyond the scholarship, like with a stipend. But I haven't actually seen anyone get that. I've only heard about it. But yeah, there's definitely a lot of money in the law school space, I suppose. Just you got to have a plan going in.
Yeah, that's awesome, man. So before, I know a little bit about like what you have going on, but for the listeners' sake, can you tell the listeners like what kind of portfolio you have right now?
Sure. So I'm funny that it's kind of going through a bit of a transition right now, but I did mention that I started with house hacking. So I guess I'll kind of go through the evolution of the portfolio and the few years it's been. When I was, I would have been 21, I think, is when I got my first house hack. I just finished up undergrad. I did undergrad in 3 years because I had some credit from high school that allowed me to accelerate that. So right out of undergrad, I put like 10% down on a condo in Chicago. It was a 2-bed, 2-bath. And that was my first start in real estate. And my thinking at the time was I was going to do like one of these a year and just build the portfolio that way via house hacking, and then maybe some other investing outside of that as well, using my W-2 job and eventually my attorney salary if that came about. And that would be kind of the way I'd do it. But anyways, I did that house hack. That was so that would have been 2018. End of 2018 is when I bought it. Went really well, totally subsidized my housing while I went to law school, which was on a full ride. So I wasn't like out of pocket there. So that was really good timing with that. And I still hold that as a full rental now. I've since moved to Houston, actually, within the last year. So Chicago to Houston. And in between there, I picked up another townhome in Chicago, near kind of in the same location as my first condo, and that is now a full rental as well. And that was using 5% down. I didn't house hack that one while I was there, but I only lived in it for a year anyways, because the plan was just to keep buying them. And in between those two properties, I actually bought a property in Indianapolis, a single family home in 2020. So right before kind of things went insane with prices and monetary policy and everything, it was kind of ramping up at that point. So as of now, I have those three properties as rentals, and I have my house here in Houston, which we put a decent amount into the rehab on. And so 4 properties if you count the house, which, you can count it or not. I'm not house hacking at the moment. We don't plan on making it a rental anytime soon. But I'm actually looking to sell my Indianapolis property because I'm trying to invest into businesses. And I think maybe this would be a good part to transition to. But I am looking to sell that property, and I actually just sold off a bunch of public stocks that I have as well in an effort to try and double down on both a recent business purchase I made and also into future businesses as well. And the business purchase I made since moving to Houston was a carpet and steam cleaning business. So I know that sounds very different to anything that we've already discussed with real estate or law. And that's because I'm looking for more opportunities for higher cash flow. And I guess I'll leave it from there before I start rambling too much.
No, that's really good. I want to talk about the businesses and how you got into that. But I wanted to go back a little bit and ask you how, for someone who's so young and you're just doing a law stuff, this traditional path. I'm an engineer. I have a master's in MBA and all that crap, and I do that stuff.
Oh, all
I,
that stuff.
yeah, I have the W-2 job going on too. But I wish I knew what you know now because I'm 37. So how did you come across this? Was this the Purple Bible for you as well?
Let's see. I think so. I'd been looking at stocks a good amount through kind of the value investing lens, which is kind of the Warren Buffett school of thought, where
Yeah, of course.
you try and work out the intrinsic value of the business and then buy it at a discount, which is already the approach that like you and I would use with real estate. You're looking to find a deal. And it applies pretty well to stocks as well, depending on what you're going for. So I was already kind of doing it on the public side of things, the public stocks. And then just through, I guess, YouTube and other resources, seeing what other investors are doing, seeing these private deals, small businesses that you could also buy, sort of like a stock, but quite a bit less liquid and there's a bit more involved. But it's the same fundamentals. You're buying a business, you're buying a revenue stream, and it might require some active involvement, but that can be a way to really catapult your cash flow forward, even more than something like a great rental property or some high yield dividend stock or whatever it is. So it just was kind of a natural extension of what I was already looking at, I guess, is the short answer of it.
Yeah, that's really good, man. So you did the house hack, which is I always recommend people, to get into that. Can
I
you
still
tell?
do.
Oh yeah,
I still recommend that.
I live in Costa Mesa, or Orange County, California. I don't know if you know, but they're expensive as hell. So I have a
Yes.
roommate and I have a unit in the back, which I rent out as well, because it costs me about $7 grand a month to run this place. And, that'll be all of my income. I'll pay, it'll be 100% DTI, like debt to income if I had to
Right.
do that. But I can't do that. So I still recommend people. I wanted to ask you, I know this, but I want to, usually you see on the radio or on the TV, they say, hey, you need to have 20% down to buy your house. But you did mention you put 5% down, 10% down. Can you tell the audiences what's that all about?
Sure. Yeah. I'm sure you're plenty familiar with it too, but when you own or occupy a property, you typically have access to way better financing options than maybe a typical investor. That on the investment side, you're often going to have to bring at least 20% down to the table. Interest rates might be a bit higher. Terms might be a bit worse. But whereas if you're an owner occupant, which typically means you have to live in the property for a year, depends on your loan terms, but that's what I've seen to this point. If you do that, you can get access to things like FHA loans, conventional loans, which are usually 30-year fixed rate loans at the lowest rates you can possibly get. And you can put a little bit down. With FHA, you can put 3.5% down. With conventional, it's usually between 5 to 20, but usually as low as 5. Then even with things like VA loans, if you're a veteran, you can get 0% down and get pretty wild, infinite returns at that point, right? Besides your closing costs. But that's the big advantage. of owner occupying is you can just lock in this really awesome financing compared to what you would otherwise get if you were just doing a straight up investment as a buy and hold. So that's what that's all about. And I definitely wanted to take advantage of that, especially while rates were crazy low. And we locked in a couple like solid long-term mortgages on what I thought were pretty good deals that would still at least break even on their own if I moved out of them. And so that was kind of the first step, was making sure it would work. I'm not sure if that would work so well in Orange County, but it did work in parts of Cook County. It's a little bit harder today, but when I was doing it in 2018 and then into the second one I bought was in 2021, still able to find something there that would work. And if you have to bring a little bit more down to the table to create more of a cushion, you can still do that, but you have that option.
Yeah, that's really awesome. And there's a lot of people listening, and they might not fully understand the extent of what you said. So I wanted to break it down a
Yeah.
little bit. So guys, so I'm from India, so I'm not from here, right? So I grew up in India and I came here like 15, 17 years ago. So what a lot of people assume in this country, which is hilarious to me, is they complain that they say, oh, the housing prices are too high and the interest rates are too high. There is no other country in the world where you can get a 30-year fixed mortgage when inflation is high and then the negative interest rate, right? Because it's lower than
Right.
interest rate, and they fix it for 30 years. There's no country that does that, right? So the reason they do that is because the government subsidizes it and sells it on the back end to investors. So they want home ownership. So this is a way to get into owning assets in this country where anybody can get into a house. Like, for example, even in Orange County, you can buy a condo for $400,000, $500,000, which is, let's say it's expensive, right? You only really need $25,000. Now, a lot of the time you can get credit, to like closing credit and stuff. You can offset most of it and have a low enough interest rate. Then all you have to do is you can save 25,000 in a couple of years, right? And then you can just get into the game. That's what most people, forget. So I wanted to go back to you, where where a lot of people give excuses and say, "Oh, I don't have the money. I don't have $50,000. You got to put 20% down and all that stuff." What made you go the route of, oh, let me try to figure it out. Let me get this one house and all those things.
Well, I guess. Well, first off, I will say to your point about the U.S. and its unique mortgage game. I think half of all residential mortgages are owned by the Federal Reserve. So the central bank prints money to buy loans. So effectively, everyone who doesn't have a mortgage that's owned by the Fed is subsidizing everyone else who doesn't, or everyone who doesn't have a mortgage is subsidizing those who do. So call it perverse, call it whatever, but the system is rigged in favor of homeowners, at least as it stands. So for whatever that's worth, but it doesn't mean that the opportunity isn't there. That's exactly where a big opportunity is, since they do subsidize those things. I guess as long as you acknowledge that, then you can go and take advantage of it. And that's before we even get into tax benefits and all that, and plenty of other things that the government does to help out real estate owners and investors. But anyways, to your question about why I wanted to start with that. One, it's partly because you can get in with relatively little down. At the time when I was starting in 2018, prices didn't seem as insane, but it always feels expensive. I remember at the time thinking like, oh, you're stressing over the extra 1 or 2% in returns. At least I was, and haggling there. I'd never done a deal before, so it's just funny looking back now. It's like, wow, I really wish I could have scooped up dozens of properties that year or something, because you see prices now. But not that will necessarily continue into the foreseeable future. But I guess the lesson there is just try to take advantage of great deals if you have them, if you're looking to invest in real estate. But anyways, I knew at the time, at least, I thought I was going to be picking up one of these a year. Seems like a really efficient way to do it because you can get in with little down, and my salary could replenish the down payment every year. And as long as I was making sure to get things that would cash flow or at least break even after I moved out, it'd be a nice way to build a portfolio pretty quickly with relatively little out of pocket. It's still a significant investment, even when it's 5% down. We're talking tens of thousands of dollars at least. And you want to have reserves set aside too. So I don't mean to suggest getting reckless, but that was really just my thinking going in. I wanted to make sure I just got a property, got used to it, got over the fear of doing a deal, and learn more about the real estate game, looking at a bunch of properties. It just was a nice exercise in that sense. And it was lucrative in that it completely offset my housing costs while I was in law school, which was really nice because it took a lot of stress off and I could just focus on doing well in classes. I was working at the time as well. So I did night school and was working during the day. So not having to worry about rent or a mortgage was pretty nice because he had that extra rental income coming in. The equation just made a lot of sense, I guess is the short answer.
Yeah, man, that's really cool that you were able to do so much. That's what's funny is Drew and I also started in 2018, so we were only able
Hmm.
to buy one a little triplex for like a quarter million, and then we bought only one in like 2019 because it was so difficult to understand and learn the game. And then we bought a lot after that, but that was really cool that we started off just 4 or 5 years ago, and looking back now, we always think, oh man, we should have bought more. But then, like you mentioned earlier, Jack, it's just when you buy, I always tell people when you buy real estate, it's always, always, always going to be like it's just a little too expensive.
Hmm. Yep.
That was
Yep.
always how it works. Otherwise, everyone and their mom and their dog will have real estate, right?
Right.
It's the people who want to sacrifice a little bit. I didn't want to get that BMW. I only had 20 grand, and Andrew only had 20 grand. We put down like 40 grand to buy that $250,000 house. It's just a little sacrifice, but like what that builds in years is just it's so much. Do you have anything to add to that? Like, how people who don't get started never want to make that sacrifice?
Yeah, it's very hard. I remember distinctly when right after I had closed on the condo, so my first property, I remember just I'd run the numbers a million times on like a spreadsheet I built, and I'd seen dozens of properties and made offers on a bunch, and finally got this one. And then I just like felt sick to my stomach for like a good hour, I would say, in this now vacant condo I was walking into. Just like uh, what if I lose my job and I can't make the payments before it's rented, and what if it doesn't rent for what I think it'll rent for, and all this stuff. Every fear just like kind of flooded at once. I didn't have a panic attack, but I did feel pretty sick. So uh, I don't know if it's avoidable, especially when you've never done it before. Just being in new territory, you're going to have some fear. And like to that, in this sort of pivot I've made into trying to buy businesses, there's some fear there too. I feel a little bit more comfortable because I've done real estate deals before, and at the same time, I'll be more comfortable with future real estate deals because I've done business deals. So it's just doing deals gets you more and more comfortable. I know you and Andrew, you've done I think a couple dozen deals at this point, right, in California. So I'm sure each deal is a little bit less nerve wracking than the previous one because you've you just get that practice. You know what to look for, and you're getting more comfortable as you get the reps in. I think it applies to just about anything, but certainly with doing deals. Um, so long as you don't get over leveraged. That's I guess the caveat here is making sure you got reserves ready to go, and you're not just buying deals for the sake of buying deals, but at a certain point, you just kind of have to rip the band-aid off if you're really looking to make a difference in any area of your portfolio, not just in real estate. You just got to make the plunge um, within reason, of course.
Yeah, I wanted to, what's interesting, you mentioned that, seem to know things about leverage and, how it works. So I actually don't recommend, because I can't recommend what I did because that was so insane. It doesn't make any sense. But for me, my bias or my reasoning when I did what I did was I bought a lot of real estate with a lot of leverage in very high risk. The only reason I did that was I was worth nothing. I was worth trash. So it doesn't matter like if I failed, right? So I just took a huge swing at it and I just went insane, just bought a bunch of stuff, right? And then I started accumulating wealth. And then I decided, yeah, I'm not gonna now I have things to lose and risk and I'm taking people's money to invest, right? But then when I started doing that, I started becoming more and more risk averse and stuff. But I recommend, like when people ask me, how many LLCs do I need to get started? I was just talking to my friend today, she was asking about like holding companies and such. And I was like, you don't need a holding company. You don't have anything to hold. Like, why would you need
Right.
that? Right. I mean, I'm the first $1 million of real estate I bought. I didn't really have anything. It's just like, it doesn't make sense. Like, what am I going to lose? I'm worth nothing. Like, it doesn't matter.
Yeah, I actually I'm to that. I do want to get your opinion on this.
Yeah.
So that theme of kind of, I would call it defense versus offense.
Yeah, sure.
You kind of took a big offensive swing with levering up a lot, going from maybe some higher risk, we'll say, properties, or
Sure.
maybe not higher risk, but you know what I mean.
Yeah.
You took some extra risk to try and drive things forward, and now you want to take your foot off the gas a bit, play more defense, protect what you have. Makes sense. So kind of in that same frame, the reason I'm selling this Indianapolis property, it's there's no debt on that one actually. I kind of did a refi of sorts and put money into that one. I only bought it for like 85 grand back in 2020.
Nice.
I don't mean to offend you as a Californian, but
I can't even use 85 grand to put a down payment here, no? It's
right,
crazy.
exactly. And it was a nice rental. I
Nice.
still own it now, but we put in by the end of it, we'll have put an extra 20 or so, 25 grand in to fix it up and get it ready to go for sale. And we should be able to sell it for something like 160 to 170 in a great day. And one down the street just sold for 170. So people still are buying Indianapolis, I guess. A lot more appreciation than I would have guessed going in. But either way, I want to roll that into something that has more offensive capabilities. So when we're talking about small businesses like this business I just bought, this carpet and steam cleaning business in Houston, I bought it for just under 180 grand, and it was doing about 70 grand per year in cash flow, and it's been around for a few
That's
years
the
now.
NOI on it?
Yeah, that's your net cash flow at the end of the day.
That sounds insane.
Yeah, well, that's the thing with private
It
businesses.
doesn't make any sense. That's a 50% cap rate.
Yeah, you're looking at, well, the thing is that there's risk involved. It's typically not going to be as stable as, a class A rental property in some nice area. And then you got to operate it. But that's the thing, like the multiples on these businesses typically are anywhere from 1 to 4 times free cash flow. As the business gets bigger, that multiple will get bigger until you get to more like stock market multiples, which might be 10 to 25 times earnings, depending on what you're looking at. But yeah, you can scoop up these businesses if you have the operational prowess to do it, which is much easier said than done, for typically a couple times free cash flow. So that's kind of where I'm thinking. I would rather steer my money now while I'm young, have a lot to learn, can build the skill of building a team and running businesses. You keep reinvesting that into these 1 to 4 times free cash flow opportunities. And then once I have a substantial amount of free cash flow going, then I'll get back to the defensive side of things, which would be picking up more properties at, a 7 to 10 cap, depending what interest rates are, of course. Buying more public stocks again. It might be higher multiples, but should be maybe less volatile, or there's less for me to do. It's more passive. So that's kind of the philosophical shift I've made since starting my kind of investment journey, is moving away from defense. I think I'm putting the cart before the horse with what I'm doing. So I'm trying to reverse that, get back into the more offensive things that can drive a lot of income now, and then steering that income once it gets to a bigger spot into more defensive investments again. I definitely want to get your thoughts on that, because I think from what I understand, what you guys are doing with your business is you're thinking about steering more towards like medium-term rentals, maybe less of the long-term stuff. So it's kind of the same principle, I would think, in that you're moving towards a more active, more offensive, if you will, driving more income now rather than the more defensive kind of long-term passive approach. There's more active involvement. I definitely want to get your thoughts on that.
For sure.
Whether it be applied to real estate or elsewhere.
Yeah, no. I really wanted to respond to your stuff too. So just real quick, what Drew and I do is slightly different. So I'm very open about what we've been doing in California. I just want people to understand we have made $0 in cash flow in 5 years, right? And we've been working for free pretty much for the partners and such, right? Sure. However, equity-wise, we're making over $1 million when we sell.
Yeah, I believe it.
Yeah, right. So that's in like 3 years. That's pretty good. But we have not made even $1. I'm exaggerating a little bit. I'm sure I made like hundreds of dollars, but who cares? For the argument,
nominal.
Say it's worthless compared to the time I spent, right? How I've learned the game, and I've done that, right? Now, the reason I was able to do that is because Drew and I make over $300,000 of combined income in California, and we don't have kids, we don't have wives, we don't have, people are paying alimony to. So we are able to drive a lot of our money into our business. And then we did that. So that's the only reason. Now, at this point in our life, we said when we started for 5 years, we will not touch money from our business, and we did not. 5 years is coming up in July, and we want to buy some Porsches, maybe buy a boat, like have a good time, right? So we're not going to buy a boat, but we're definitely going to buy some cars and stuff, right? So we want to move into areas where we don't have to support our business with our money, because we also work. Like Drew has a music school, and he's pretty successful in California, pretty famous, his music school business. So he's doing that full time, and I have my W-2 job, which is I like my career. It's a pretty good career, make 6 figures and all that stuff. But those things is what has helped me sustain my business. So if I didn't have that, we would have lost everything. Like there's no way. There's no way. Like people are squatting and doing all that stuff. We won't be able to support the amount of um, um, the
The
debts that
operating
we have, right?
expenses.
Like
Yeah.
it's about our mortgages per month is about $47,000. That's per
Yeah.
month. That's not per
Sure.
year, right? And we're
Wow.
only bringing in like 55 like per month. It's not like we're not bringing in 100 grand, right? It's only because we're bringing in another 20K from our personal, income. We're able to sustain this kind of business. So now we want to go towards like what you're doing. Yours is more insane, but I'm just going to take the cash flow to enough padding that we can actually make a couple of dollars and not put our personal money. So that's what we're doing. So to respond to yours, your cash flow is so high, it doesn't matter that it's useless. Like it's just like, oh, I don't know, it could close. If your business shut down in 2 years, you already made all of your money back. So it's like,
Right.
yeah, like
As
who
long as
cares?
all goes well.
Yeah, you're getting
But yes.
50% back, and maybe you're probably also getting cash flow. Maybe you don't even have the full amount invested. So maybe cash on cash is probably 100% for you if you took a 5-to-1 leverage, right? So that's
Yeah. I did a little bit. I took out some personal loans, which I'm looking to pay off this year. But yeah, that I don't know what the exact return will be because it's just all my own money. But yeah, exactly. If you can get the payoff quickly, you reduce your risk. But the risk that's a bit different is just there's a lot more operations involved, especially with these smaller businesses. One of the reasons they sell for lower multiples in many cases is because it's not as systematized. It's not attractive for like a VC to buy. It's not big enough. In many cases, you are kind of buying a job. But if you can add some technology to it, or if you can hire an operator, bring in an operator, or maybe you are the operator because you want to do that, that's the challenge you have to solve. So that's what I'm working on right now. It's building out the team, hired a general manager. We're looking to hire salespeople right now, trying to build out a sales team, and got actually a couple offers out right now. So we'll see if we get some folks in the very near future. But that's the fun part. If you enjoy kind of the building game of building a business, then that risk becomes the fun challenge, I suppose, to solve. But yeah, I don't want to make it sound like, oh, you just buy it and then you go to sleep. Maybe you come across a business like that, but it's probably going to sell for a bit more than 2 times free cash flow. But even then, if it's 4 or 5 times and doesn't take a whole lot to run, that's not such a bad deal either.
Yeah, man. So, people who understand how evaluations and cap rates and GRMs work, they'll probably get a little bit of kick out of this, because I want to ask you. So, if you're buying this at such a low multiple, which is great if you're buying it, now how does it work when you want to exit out of it? Are you only going to get the same, or can you stretch it and decompress that so that you can sell it for more?
It's going to be tough to stretch it unless you make the business either a lot bigger, or if you can make it just totally passive, both of those things are going to be very difficult to do without a lot of scale. But yeah, you're probably not going to see what you might see with real estate, where you get a couple of points of cap rate compression if you take a property from kind of B+ to A- or something like that, or whatever it is, or if the area appreciates. You're not really going to see that as much with small businesses because so many of them actually go unsold. That's part of the opportunity. I don't know what the stats are, but I've seen that something like 2/3 of businesses, or it might even be like 9 out of 10 small businesses, go unsold for a full year. We've seen the real estate game. It's not like that in real estate. Typically, things are going in a matter of months, and in hot markets, days. So it's a very different world when it comes to liquidity. But if you can package it well, maybe you get a little bit of multiple expansion, but I wouldn't bet on it. But to your question, though, with this business, there was quite a bit of equipment involved. There was a couple vans and carpet cleaning equipment and supplies. So there's kind of baked in real value there too that I could liquidate if I really needed to. If the business went belly up, I'd still have those assets to sell. So that kind of insulates it a bit. But as long as I run it well, then I guess you could say every dollar I add to the property is a dollar I add to cash flow. There's another couple dollars in equity right there. So long as I do it well, and the more passive I can make it, maybe that's how you get a bit of that multiple expansion, or you just turn it into a huge company. But we're talking about a different thing at that point.
Yeah, maybe like systems in place and stuff. Maybe you can get some more.
But I'm not betting on that because it's just because there's so many that go unsold. It makes it a little bit hard to do that, unless you could just package it really well, or you just find like a very hungry buyer. But that's kind of a chance encounter sort of thing.
This is one of the reasons I love doing this podcast. Is more selfish, right? So for me, I would have never in my entire life figured out that you can actually get. So you're saying for $100,000 carpet cleaning business, you can bring in not gross but net $50,000.
Yeah. Looking at the last, it is kind of wild. But yeah, I don't know what else to say about it. It's kind of like a jogging start to business. You're still going to have to do a good job. So I don't mean to suggest that it's super easy.
I understand.
I've spent plenty of hours per week on it, but it's really a part-time job at this point.
But if you hire someone, or let's say you paid him $30,000 to run this business, okay, exactly. You're still making 20% cap rate,
right? And that was kind of one of my first steps, hiring a manager. I'm giving him a revenue split for now, and maybe we'll adjust that at some point as the business matures. But he's aligned with me to try and grow the business. He's handling a lot of the day-to-day, so I can focus on building the team in the meantime. So I'm surrendering some of those profits today to try and grow it now. But I could always kind of unwind that if I really wanted to, but I don't. I want to get this business to at least the next level. And there's a lot to learn in doing that too. I'll become a more sophisticated business owner, which would make me a better investor. And then any new investments I do will make me a better business owner, and so on, kind of like what we were talking about earlier. But yeah, there's a lot of opportunities out there. I guess the hardest part is probably narrowing the niche. I went for a simple service-based business because it was something I could at least understand as a new person to that industry. One of the more complicated ones I looked at was a glass blowing company, which it was very cool, and there was some real estate involved. So it was one of the reasons I wanted to take a look at it. And with SBA financing, which is sort of like the equivalent of long-term fixed rate mortgages for real estate, you can actually get that stretched out over 25 years fixed if most of the purchase is in real estate for 10% down. So that's a potentially great option too. I didn't use SBA financing for my business because just decided not to, because I was going to try and pay down the loan in the next year or two anyways. But anyways, that was one of the more complicated businesses I looked at, and I just couldn't get comfortable with the idea of what if the main kind of technician, the main glass blower left. I wouldn't even know where to start. Like, where do we even find one of these guys? It's very niche specialized, but it was cool to see. And there's just any niche you can think of. There's probably a business for sale within, we'll call it a 50-mile radius where you're at. Restaurants, anything in retail, logistics, e-commerce, anything you could think of. There's probably something in that niche somewhat near you. And that can make it pretty overwhelming. So I think trying to narrow the search down to some sort of manageable niche makes it a lot better to try and find a deal that would work for you.
It's cool, man. So I wish you could see some of my notes I write down, but I did write down like SBA. Did you use SBA fans? But I want to, my podcast, the thing we do here, we like to be very actionable instead of just talking about random stuff nobody can use. So I want to ask you some questions to see if somebody's listening to this, they're like, okay, bro, sounds great. You bought a business, but how do I do that? Where do I start? Do we go to LoopNet? I know it's not on Zillow. Like, how do we look for businesses to buy? Like, where do you go?
Why don't you mention LoopNet? Because the same company that owns LoopNet, I think it's CoStar.
Yes,
they
CoStar
also own. They own another site that looks almost the exact same called Biz Buy Sell. So BizBuySell. That's where I started. And that is that just aggregates a bunch of different business listings, almost like you'd find on a real estate site. It'll show the businesses, usually it'll show the revenue, whatever their stated cash flow is. Often that might be a bit manipulated and you have to ask for some more information. But that's a great place to start. From there, you can maybe meet some business brokers, just like a real estate agent. You got business brokers as well who are listing these businesses. Sometimes they're listed by owner, and you can reach out to those owners. And there's always a chance that you can find a deal off market as well, where you approach a business owner in your area that maybe is close to retirement by chance, and you just make that connection. But in my case, I found mine on Biz Buy Sell, or indirectly, I got on the broker's like email listing, email newsletter sort of thing through a different listing at Biz Buy Sell, and that's where I learned about this one that had been on the market for a little while. They cut their price, so I decided to make the move. But that's a great place to start. From there, you would reach out to whoever the listing agent or owner is. Say, hey, I'm interested in this business. I'd like, could you send me more information on the financials? What does the owner do? Whatever questions you want to ask. From there, they'll probably ask you for what's called an NDA, which is a non-disclosure agreement. So, meaning you can't share all these details to the public or to other people. Makes sense because sometimes they're still operating these businesses. They don't want that all floating out there. They will often ask you maybe for proof of funds or somehow just to prove that you're legitimate. It's usually not that invasive. They'll just ask you how much money you got to invest or how you plan on buying the thing. And then usually from there, they'll send you some more information on the financials, or every now and then they'll be a bit stubborn and require an offer or something, or to be under contract before they give you a ton of details. But then from there, it looks a lot like a real estate transaction. You'll get the property under contract. There'll be some sort of due diligence period. You'll look at whatever you got to look at. Maybe request some tax returns from the previous owner to verify the income, any financial records. Check out the actual business itself physically, like looking at the assets, whatever's involved, and just doing what you got to do during that process. Then if there's financing involved, you're going to go through that process too. If not, you'll wire over the money and get going there and close and work on the transition. And that's pretty much it. It really does kind of behave a lot like a real estate transaction in that sense. Just you have the basic stages of a deal. Just the timing might be a bit different depending on how you're doing it and what the size of the business is. That's probably to get back to the initial question. Biz Buy Sell, I think, is a great place to start, and you can kind of go from there if you're interested in this sort of thing. Just take a look at some of the businesses on there, and you'll be kind of surprised what's out there. And it's just amazing what some of these businesses bring in very niche areas.
If some business is making so much money, why would they sell it? Why wouldn't they just hire someone and just not operate it?
It's a great question. From what I've seen, I think almost every seller, except the one I actually bought from, almost every seller, I guess I should say almost every seller is one of two things. They're retiring. That's probably the most common one that I've seen. They just want to step away. Maybe they're in their 60s or 70s and doing this for a long time, just want to step away. They don't want to do it anymore. Totally fine. And the other is that I see a lot, and this was the case for the one I bought, is the owner has multiple businesses and they just don't want to deal with one. They want to focus on another one. They're just stretched. And those are probably two of the most common. I can't say I've really seen many other reasons. It's typically retirement or they just want to consolidate or just get rid of the headache. Because you got to think of it this way. If the business was doing poorly, they're probably not going to sell it. It might just go belly up. And if it's doing well, yeah, to your question, the only reason you'd want to sell is if you're just, all right, I'm done. I've made the money I got to make. I want to spend more time doing something else. Get your cash out now for a couple of years worth of earnings through the sale, or stretch it out if you do a seller finance sort of deal. We can talk about that too. But yeah, those are the two most common reasons I've seen: retirement or just consolidating because they got multiple businesses.
And where do you find the data suggesting what kind of business has what multiple? Because it's pretty easy for real estate, and the area has a different cap rate and it's comps and stuff. So how do they do that for business like ironing business, dry cleaning? Is it 10x? And then if you're selling toothpaste, is it less? Like how does that work?
I don't know if there's good resources for like a standardized. There's just not as much data on that. But just looking at listings, you can kind of get a feel. Laundromats tend to be a higher multiple now for whatever reason. Probably I have a feeling because they've gone kind of viral. That was one of the first things I looked at. I was like, all right, let's check out laundromats because everyone's talking about those. What's that all about? And those are often closer to 10 times free cash flow, which like maybe that's justifiable because there's a lot of tax benefits potentially with laundromats, sort of like real estate. You got a lot of capital expenses you can write down, and you could
own
argue
land
it's more.
too.
Say again.
You can own the building, and the SBA will loan on the
Right.
building too.
Another thing too. Yes, exactly. You own the machines and potentially the building too. So that could be maybe a sort of good transition point for someone who's really versed in real estate. Nice kind of starter, not quite real estate business that's similar. You're renting out space, this being the machines by the minute rather than by the month or year. But um, those, like, some businesses just tend to be higher multiple, but a lot tend to fall kind of in that just 1 to 4 times, depending on what they are. Uh, uh, and I think just looking at listings is probably the best way to get a gauge on that. But again, just be careful because some of those earnings will be kind of manipulated if it's like, oh yeah, this is the cash flow, but it doesn't include some key expense. So that's why you'd want to ask for some more financials to make sure it is kind of a legit number and not totally inflated. Kind of like what real estate sellers will do, especially commercial property. They'll, oh yeah, we didn't include property management expenses because we do it in house, even though that's obviously going to be something you're going to need. Or they're leaving out some key expense on the cash flow statement to make their cap rate they're offering look a lot higher than it really is. So that's part of the due diligence process. But yeah, looking at those things is probably the best way.
It sounds pretty interesting. I mean, so I'm selling my Bakersfield portfolio. That's where we started. Everything is on the market right now, and then I think we went into escrow on most of them. So it's like 1.2, 1.3. We owe like 700 or something on it. So we have like a cool $500,000 in cash that we're gonna get. So just for fun, let's say your business is worth 100 grand and it brings in 50 grand, right? So if I bought in because you wanted some money, if I paid you 50 grand and then I took half of that business and you operated and stuff, is that something like people do, or would you do stuff like that or not really?
I have actually. I've been working on a couple of other deals for more businesses nearby, and that is something I've kind of asked, like, hey, like, I don't have a ton of cash right now because I'm kind of in the middle of trying to liquidate
Yeah,
to
of
get more
course.
cash, and that is something I've asked some folks, and some people have said they'd be interested depending on the deal. But I know that's something that others do. Um, you can get very creative with financing, just like with real estate. You can. I mentioned seller financing, which is where the seller can carry part of the balance as well, and that could be a way to cover a large part of what would have been your down payment, or to get just really great financing terms, depending on what the seller wants to do. Um, there are reasons that a seller would want to seller finance, stretching out the tax burden. Um, you can maybe get a higher price than they would have. Maybe they just don't care and just it's easier to sell it that way. Whatever it is. There are other ways to do it, but yeah, certainly people put funds together to buy businesses and scoop them up. It's a lot similar to what like a hedge fund might be, only instead of buying, or a VC fund might be a better comp, where you're buying shares of businesses, whether it be a minority stake or a majority stake. That's what the investors would be doing. So yeah, for sure, that's something that people do. I haven't personally done it yet, though. In the future, I could see it being a thing in certain deals. So yeah, it's definitely an option.
Man, that's cool, man. So I might look into these things, man. It's because if
It's
I
worth
want some
looking
cash
into.
flow. What's that?
It's cool. It's a cool exercise, especially as a business guy. It's just fun to kind of look at what's out there, even if you don't want to buy anytime soon. Just seeing like, oh, that's kind
Yeah.
of interesting. Maybe you want to meet that owner if especially if they have multiple businesses now, and just
Yeah,
kind of
man. It's
would be a
really
good
cool.
connection.
Yeah, so for people listening, so like I said, mentioned before, Drew has a music school. It's a brick and mortar store where people come in and take lessons, right? Which
Hmm.
means I could buy a building and then half of it could be Drew's school and then the other half could be, let's say, a laundromat. Now I could get an SBA loan on both of them and then just, operate that business. So it's
Yeah,
just interesting how this works.
yeah, you can get creative with it. And that is you can actually, at least on Biz Buy Sell, you can actually filter by businesses that have real estate involved too.
Yeah.
Sometimes there, depending on the area, there might be more of those than other areas, but that could be a nice kind of starter. That's what I was starting at. I came close on a couple, but just wasn't quite there. Got beat out on a few by some other buyers. But it's that's another potential option where you actually can kind of insulate yourself. You're an expert in real estate. You've done plenty of deals there, and now you're kind of sort of building in a safety net where you're getting a good deal on the real estate, and that kind of insulates you if the business doesn't do well, if you run it poorly for some reason, or something happens with it. You have that real estate to fall back on. So it's definitely a viable strategy too. Just kind of depends on the deal, just like anything else.
Yeah, man, that is super exciting. Is there anything else that people should look into other than, maybe if you're going to do laundromat, maybe partner with someone who knows how to run that business? That's always useful rather than you figuring out, right? Is there anything else?
Have you thought about investing in real estate and taking advantage of all of those benefits without any of the work? That is something that OnV Invest not only provides, but has been providing since its inception. With friends and family, we have built an empire and a system of a wealth generating tool that is giving us and our friends and family that leverage in their life to create true wealth. Go to onvinvest.com for more to see if you qualify. And thanks for listening.
Is there anything else that people should look into other than, maybe if you're going to do laundromat, maybe partner with someone who knows how to run that business? That's always useful rather than you figuring out, right? Is there anything else?
Yeah, I think kind of back to what we were talking about before, which would be just trying to find a niche. If you are really interested in this, and especially if you're looking to have an active involvement, try to find a niche that you could be comfortable with. I think a simple service-based business is a nice place to start, since you can wrap your head around it. You can typically find labor for it a lot easier than something maybe more specialized, even if you might not be able to get amazing growth or more like you don't necessarily have premium pricing on some of these things, are more of like a commodity. You can still get a pretty significant slice of the pie, because like with carpet cleaning, for example, I didn't buy a business that's proprietary or super unique. They just do good work. We show up on time, and that's really all you need to do to make a pretty serious amount of money for one person at least.
So that business came with people and
It
trucks?
did. It had a couple full-time employees, and the owner was kind of working part-time on it. So my first hire was a general manager, and it's only been a few months at this point. But
Has it been making that kind of money in the few months?
I bought it in the slow season, so January is always slow. February is pretty slow, but March it's already ramping up, so we're getting to those projected numbers already. So yes, granted, I have the extra expense now of having a general manager on board,
And
but
then
that was to be expected.
and that's business already has Yelp and Google reviews, so you're getting customers automatically.
Exactly. And we have, when I bought the business, is another thing to consider: how many existing customers or previous customers do you have? And this business came with 6,000 or so former customer contacts. So that's people we could start calling right away. Be like, hey, it's been a year since you've gotten your carpets cleaned. What do you think? Or hey, we did your upholstery cleaning 18 months ago. We recommend doing that every year or two. So you want to come back and do something. So like that's a nice advantage to have. Again, it's that jogging start versus trying to start from scratch. You already have all these contacts to pull on, and that nice Google profile as well. It makes it a lot easier.
That's awesome, man. Thank you so much, man. This has been super useful for people who are listening. I mean, because people they think one of the things that I've learned in my life is I always thought that the people who in school and your family, that's all the people you will meet, and you got to figure it out. But that's not true at all. I could literally just walk outside my house and just meet someone new, right? It's the same thing with
Right.
like business too. Like I thought I could only do engineering. I'm from India. I have an engineering degree. I'm going to engineering forever. Doing the immigrant stuff, and then I figured out, wait, I could do anything if I really wanted to. And then I thought, oh, maybe I can only do real estate. Now talking to you, I'm like, maybe I could buy a carpet cleaning business. Why not?
Exactly. This was not part of the plan initially. It really wasn't. It just was like, I've been kind of joking with my investing buddies I'm like kind of aging in reverse, where I started with like all like buy and hold real estate, into stocks. I'm still holding the real estate, of course, but now it's like, okay, let's sell some of that and get into actually running a business and being an entrepreneur and going that route. And then eventually getting back to more heavily into real estate and public stocks. But defense versus offense, it's all a balance. Depends on what your goals are, what stage you're at in your financial career and in building your portfolio. But that's kind of the balancing game. It's figuring out what part of the spectrum are you on right now with the defense versus offensive side of making money or preserving it.
Yeah, man, that sounds good. I mean, we can chat offline too to see if we want to do some deals together and stuff like that. I'm always
sure.
Yeah, that'd be cool. What do you do on YouTube and stuff like? Do you have anything that you educate people on? Do you have like a mentorship or like how does that?
No mentorships yet, but I do run a channel. Just my name, Jack Duffley. We've gotten up to 5,000 subscribers pretty recently, so that's
Nice,
been exciting. Thank you. So that's probably I put the most time and energy of all my educational resources. I guess I put the most time and energy into that. But you can find me on the other socials as well. jackduffley.com/links is where I kind of keep everything. And it's links plural. And my YouTube will be there and everything else too. So if anyone is interested in that, I try to document kind of everything I've been doing on the business and investing side and show my whole balance sheet, everything. So I try to be really transparent with it and sort of like a diary, I guess, and we can get a conversation going at the same time. So that's where you can find me.
That's cool, man. I saw that your assets under management hit 7 figures, right? It was like,
Yeah. Yeah. So are the liabilities though. So
yeah, a lot of
working on
liabilities, but it's still a 6-figure net worth, so that's cool.
Yeah. Yeah.
I know a lot of 26-year-olds who are worth 6 figures. They're usually negative 6 figures.
Yeah. They thankfully avoided that. Yeah, it could have been worse, but just trying to improve every day, just working towards goals, building up the cash flow. The net worth number is less important than just right now building skills and building cash flow. So that's what I'm focusing on.
That's awesome, man. Maybe we'll have another chat in a year, and then we'll see where you stand, and it'll be very exciting to keep.
That'd be fun as long as all goes well. Then it'll be fun.
Yeah. We don't want to come back next year and you're like, oh, my net worth is.
You'll know
$10.
something's wrong. Yeah, you'll know something's wrong.
Yeah. That's cool, man. Hey, thanks for coming on the show, man. Appreciate it.
Yeah, I appreciate it, Vince, and yeah, we'll be in touch for sure.
I don't know about you, but I definitely like to see 5-star reviews on any service or any product before I purchase. Please take a second to leave us a 5-star review, whether you're listening to it on Apple, iTunes, or Spotify, or whatever platform. Take a second, goes a long way, helps us a lot to grow the channel, and thanks for listening.